On Sunday, I said Monday and Tuesday would be really, really red days, and sure enough, they were. It's definitely worth going back and watching Sunday's video and Monday's video before watching this one. What I have pulled up right here is just a 1-minute chart, and I just couldn't help but see a couple of similarities between today's open and on Thursday. I said in a previous video that I was expecting to see this pattern again. And we've had it. Like here's your AMC swoopy, the descending scallop, and weird fake bull breakout, but it's fake, right? So the price just tanks afterwards. This is so similar. It's like the same, right? So this AMC swoopy or the descending scallop, the price target is pretty easy to calculate. You just take the height of the pattern, and then you multiply that by the percentage being price target. And for a downward breakout, that's 34%. And when I did that, I got a price target around 1064, 1060. So probably 1050 really. That's where I'm thinking the price will move towards tomorrow. If at open there is not a rally. And the only reason I can think of a rally occurring would be related to the CPI data. And it would take amazing CPI data that the CPI is decreasing in general. And anything other than that, I think is just going to lead to market continuation. Find more downside. I don't necessarily think it's going to be a very big drop. I think the big moves are behind us. I do have some bad news though, and that is that the vertical run down pattern has been nullified. And that might sound counterintuitive because, well, look at the price. How on earth could I say that we're still not in this vertical run down? But there's a technicality here, and that's important when you're doing technical analysis. You can see that this downtrend, it's pretty strong. The first 3 bars don't overlap at all. Maybe the wicks and the tails do a little bit, but nothing like this. We had a gap up, and on Monday I said if we gap up on Tuesday morning, that could lead to downward momentum, and if the markets are looking for a bottom or a new low, that the momentum could compound and send AMC downward, and that's exactly what we had. You can see this volume trend is now increasing a ton, and not all of this volume is on this tail either. A lot of that volume is up here as a topping, as setting resistance for a bounce. See, that's why the vertical run down is nullified. You need to get 4 consecutive sessions of drops that do not overlap or have nominal overlap, because as soon as this overlap occurs, new levels of support and resistance start coming into play. And what that does is it interferes with the retrace move. So if we had a nice clean open heading down off of yesterday's low and we had a big red day like this, I'd be really optimistic looking for a bottom. There's a 46% chance of a full retrace out of this pattern if you can qualify for it, if the price qualifies, and it no longer does. So, I hate to be the bearer of bad news, but something else too is, as soon as the price moves up like this, after setting a new low, is the downtrend changes. So before, I would have drawn a downtrend here through here, okay, like this. And the open of today's candle would have been below that line and set a new low, and the downtrend wouldn't move. But now I have a wick that I have to include in the downtrend, which causes the downtrend to be pulled outward this way. And what that does is it reduces the slope of the downtrend. And the effect that has is give strength to it. The more shallow the trend is, the more stable. And so now we've had a couple of different tests of bullish momentum within this downtrend, and they've been overcome. So it makes sense, and it's like, wow. I'm gonna have to do this weekend's analysis is gonna be really interesting. I can't wait to get a good look at this. Again, my daily videos this is just me journaling, so capturing my state of mind and my observations in the moment. This volume trend is nuts. Implied volatility did drop. It makes sense about the overlap in price between these two bars. The RSI is coming into oversold, I do expect it to continue to move deeper into oversold. Tomorrow could be a doji. That would make a lot of sense to me, but I do expect some more downside before seeing the price eventually start moving upward. On the 1 minute time frame, we have a potential for a double bottom. And I think the most aggressive buy signal I can produce with Bulkowski's analysis is when the price pushes above this line, that this would confirm a double bottom. Okay, and then there'd probably be a test at that downtrend, right? I don't know what it would look like. And the eventual target for that double bottom would be $14, which is just below a significant level, $14.24. So I'm going to say that if we do get a good number for CPI, well, you know, good numbers, that the rally could be up to 14. That's the first test. It's a little scary because we have this peak we made today, and if the price does go that high, consolidate, and reject, push downward, there's a risk of a double top. And there have been a lot of those double tops. You know, they're everywhere in this downtrend. So I'm not flipping bullish until the price can close above 14, and then it needs to get above 16, and then we'll talk about other targets. But I had this really great bullish recovery analysis, but without the vertical run down, I don't think it works. So that's unfortunate. What I do see is a scallop in here, and it looks like the price didn't confirm. But if you know, at the open, we have bad economic data and the price just dumps, that's going to secure or confirm this descending scallop, and it has a price target of 1064. And that's really what I'm going to be thinking is most likely is another little dip. And whether or not there's support there and then we begin a reversal, I don't know. Whew, what am I at? 6 minutes just to get there? Okay, covering my day trades. I'll try to do this in 60 seconds or less. I had an amazing day today. Amazing day. Let me zoom in on the open and explain what I saw and what I did. So the open was green and we did have this gap up, and I was thinking, you know what, Cap? You said that if this happened, that this thing would turn around with momentum and find a new low. And so I bought 4 puts. I bought 4 May 13th $13 strike puts for $66 a pop, which is most of my available cash. And so when the price, I did that, let's see here, right? I always line up these arrows with the candle I did it on. So right here, this red candle, I thought, oh, pipe top at level of resistance. Here I go, enter. Of course, it was way too late. And boom, 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 boom. And I'm getting wrecked, but I'm holding. Price had a double top here. Look at this pipe top. Very, very good pipe top, very clean. And then, and the downtrend that was previously established began to act as support. And this was scary. I was holding my breath through here because when the price was up here, my puts were worth like $8. And when they were down here, or I was positive $8 on the trade. And then down here, I was up $40. So it was like $8 or $40 over that tiny range. And I just held because I saw the scallop start to set up. Look at the scallop. Do you see it? There it is. And doesn't it look almost, there's the double top and there's the breakdown. This thing has been fractaling all over this downtrend. It's insane. Anyway, the price starts to tank and I'm making good money. So let's see here. I started taking profits right here. I sold those $13 puts for $111 a pop. So I mean, it's basically 200%. I didn't really look at it earlier, but I know in the Discord I said 200, but you know, I did 200 and 400% earlier. Like, this is what I do. So I do this a lot. And here I go. I let go of the 1150 put I bought yesterday at a loss, nominal loss, and that loss is on the board. And it fits within the previous day's profits. So on Monday, even with that loss, I'm still green. And the idea there was just to be grateful that the price did what I thought it would and then not rely on it to go further before losing more money on that put. Obviously, I should have held that put. I mean, yeah, duh. Now I know that. But at the time, you just can't. So risk management says take the loss. So I did. And then we saw the scalp come up. And wait, what? Scallop? Scallop? Right here. So many scallops. It's all part of a bigger scallop. And then I ended up buying another put here, which was too early. and I almost always the opening trade's always the best for me, and then mid-afternoon I do poorly. I took a loss on that put here, and then sure enough, the price starts forming this divergence with the RSI, and it was on IWM as well. I said, oh my goodness, it's topping. So I went ahead and entered another put. I took a loss on that put too and opened another one, and that's okay, because now the price is coming down, and it looks like we're about to break down and move lower, which is great. So I currently do have a couple of puts open. I believe it a $9 or a $9.50. I'm gonna take a peek really quick. I've got two open puts. What are they? It's a $9.50 put and a $10 put. Now, I chose those contracts mostly for their cost because I can afford to lose them and still end totally profitable. And that's because on the opening trade I made $180, and that's more money than I started this day trading project with. So like I can afford to lose them, and I can take the risk to hold them, because if they run into the money, they're gonna be worth a pretty penny too. Okay, I'm at 11 minutes. I covered my day trades, and what my analysis was, I'm looking for $14 to act as major support and resistance. I'm looking for a low near 1064. I think CPI data could have a big influence. If not, looking for a mild low day. I think we could have short candles down here, probably a doji. I would be shocked to see another big red scary candle, but I said on Sunday that might happen on Wednesday, so I'm gonna stick with that analysis I gave on Sunday because it is on the mark.